So in this particular instance, the net book value of my premises and my motor vehicles, that's all I'm given. Okay, so I'm not given any cost, I'm not given any accumulated depreciation, I'm just given one single figure. So I'm going to put in, what have we got? We've got premises, which I've called land and buildings, and obviously you might need to do some swapping around of names here, but I would have left in the exam, I would have left that as land and buildings if I had already written it down. But in any case, I've got 98320. Okay, so do you see what I'm saying there? That they haven't given us any other information. So we don't have a cost, we don't have accumulated depreciation, we don't have anything except the net book value. We've nothing in plant and machinery, and then we've got motor vehicles, and the motor vehicles is 10270. Okay, so my total fixed assets is 10590. Sorry, 108590. So that would be my non-current assets, or fixed assets as we would call them, and be ready for either of those names when you're in business, but for accounting technicians we say non-current assets. So these are the assets that you will use over more than one period in your you'll use over more than one period in your accounting cycle. Okay, what else have we got then? We've got current assets, we've got inventories, we've got receivables, we've got bank, and in this case we actually had cash in hand as well. So I'm going to insert there because I hadn't seen that before. So I'm going to move my bank up and I'm going to put in cash. Okay, so my inventory figure is 24330, and again that was the same inventory figure we used for closing stock. 10119. For bank we've got 20442, and for cash we've got 1351, and of course all of those figures are coming from these highlighted items here. So we haven't got to the capital yet, but we've got premises, motor vehicles, receivables, we've got bank, cash in hand, and we're going to deal with payables, drawings and owner's capital in the equity and liabilities section of our statement of financial position. Okay. So far so good. What have we got? We've got the total of our current assets coming to 56242, and that means that my total assets, and this is what I want my total liabilities to match, I've got my total assets, they are coming to, little top double bottom there, total assets coming to 164832. 164832. Okay, so now I'm going to go to the other end of this and I'm going to go to my equity and liabilities. Okay, so I'm looking for a capital figure. Okay, the owner's capital, just going back here, do you remember it was the first one we had on our list? So the owner's capital was 148582. Okay, the net profit, which we got from our income statement, was 7822, which we filled in, less the drawings. So the drawings that we had in this particular instance were 6835. Okay, 6835. So I'm just going to make that a minus because of course we deduct, so it's less drawings. Okay, so far so good. That means that we have retained earnings. And what is retained earnings? Retained earnings is capital and profit that you haven't spent yet. Okay, so in this case it's capital plus net profit less drawings gives me this retained earnings, and the retained earnings figure is 149569. Okay, 149569. And then finally, let's have a look. Do we have any bank loan? No, we don't, so we'll just put in a 0 there. But you might have some other non-current liabilities, so liabilities you intend to pay outside of 12 months. Do we have a bank overdraft? No, we don't. We'll put a 0 in there. But we do have trade payables, and the trade payables, just popping back, our payables were 15263. 15263. Okay, so that gives us total equity and liabilities of 164832. Now let me just roll back up and see. I'm just going to make that slightly smaller, guys, so we can see both figures. I'm happy to relate that they are the same as each other. There we go. So 164832, 164,832. So now we know that all of our assets are equal to all of our liabilities, our internal liability, which is the capital piece, and our external liabilities, which would be to payables and banks and so on. Adding those together gives us the same total as our total assets, our non-current assets and our current assets. So we know that we've done everything pretty much correctly because we have used our net profit figure in our statement of financial position, and it has balanced both sides of our statement of financial position. So our total assets is equal to our total equity and liabilities. Guys, I hope that helps. Please make sure to message me with any issues that you might have, because don't forget, if you're having an issue, other people are likely to be having an issue too. Just a couple of quick points for you. Don't forget that your statement of financial position is as at a particular date, so it's a snapshot. Your income statement, on the other hand, is for a period, so for the year ended the 31st of August 2017. So you build up your income statement over time, and then you clear it down, so all of the pluses and minuses end up with one figure, and that is your net profit figure. So as you clear everything down in your profit and loss, and you bring that net profit figure into your statement of financial position. And don't forget that your net profit represents all of the pluses and minuses that happened during that period. So everything that has happened is reflected in that one number. That 7822 is the entire performance of your business. Okay, so statement of financial position as at, and income statement for the period ended. Okay, I hope that helps, guys. Look after yourselves. I'll see you on Monday evening, and take care.